Thank you for watching Resource Talks. My name is Antonio, and I'm in Switzerland for yet another mining conference where over the next couple of days, there's supposed to be over 1,000 people coming over here to listen to over 100 junior mining companies pitch their stories. Actually, I think that's worth repeating. Over 100 junior mining companies. 100. How many zeros is there in 100? Now, that's a lot of junior mining companies in one place, all of whom are here, I assume, to essentially promise positive returns to risk-loving speculators. But the reality is that the majority of them can only really generate any kind of returns if, well, first of all, there's some sort of a miracle, I guess, but also maybe if there is an overall bull market in, hold up, I was about to say if there is a bull market in metals prices, but there is a bull market in metals prices. Gold is over $3,000 an ounce. Some of the producers have even started moving, although annoyingly slowly, at least for the most of us, and yet here I am complaining that the juniors are not doing well enough. So what's really going on? Why are the juniors not moving as well as they should be? Now, that's exactly the question that I plan on asking to a few of the talking heads that are here over the next 2 days, but of course, not before I've warned you that your capital is at risk, because we'll be discussing high-risk ventures. I also want you to know that I'm personally conflicted in multiple ways, because I'm an active speculator in junior mining, which means the guests might end up talking about companies that I personally own, have owned, or will own in the future. Second, I run a content creation business for junior mining companies, which means that companies that are mentioned in this video might be paying clients of Resource Talks. And lastly, the SMI is paying for my stay here in Zurich, as I am one of the chairmen of this conference. And additionally, all of the other warnings, like every other time, they still apply. Please pause the screen, read them. This is a general and impersonal entertainment program which is intended for experienced junior mining speculators. And even for them, this is among the highest risk sectors to speculate in. Failure is the norm and should be the expectation in this venture capital business. Given that nobody you're about to hear from is your financial advisor, you would want to consult a professional licensed financial advisor before continuing on. And again, please read the warning in the description of this video, as well as listen to the full warning at the end of this video to make sure you're fully aware of all the biases and the risks involved in consuming this content. Now, let's try and figure out what's actually holding the juniors back. All right, David, gold's currently at 3,000. The juniors, though, they're not doing too well. And when I say the juniors, they really mean the explorers. Why do you think that is? What's holding them back?
Yeah, look, I think that there are a number of factors, right? And I think we've seen this in past cycles, is that people come for the producers first, where they can see kind of free cash flow leverage on the rise in the gold price. And, you know, the conceptual thing of revaluing gold in the ground tends to come a bit later in the cycle. And I think that, you know, there's still a lot of people who are underwater in the juniors from the last cycle that we had, 2019, 2020, and there's a lot of people who kind of got, I think, got badly hurt in the downturn that happened afterwards, and maybe they're not so keen to come back. And you know, I also think that there are many juniors around who've been there for like 2 or 3 cycles, right? And there hasn't been that much visible progress towards, you know, up the kind of PEA, PFS, FS kind of thing. And it's pretty clear that a lot of these guys don't really have any intention to develop their assets. And you know, that's a relatively unattractive investment proposition, to have guys who are finding ounces and just hanging around waiting to be bought by somebody else, right? And I think that some of the juniors that have performed well are the ones where you can really see that it is going to be a mine, and you can see how it's going to get there, right?
What do you think needs to change for the sector as a whole to get a lift up? Because we have seen some of them do well, again, most of them not. What has to change? Is it some sort of a structural change within the sector? Do we have to do something as a sector? What do you think?
It's a tricky question. You know, I think that, you know, part of the problem for investors is that not all the juniors can do well at the same time, because there's so many of them, right? It would take an awful lot of buying, an awful lot of capital for all kind of 2,000 of the 2,000 exploration stocks that are quoted to do well at the same time, right? So I think it's always going to be a game where that there's going to be a decile of the exploration sector which does really well, and the other 90% which
Right.
just kind of hang around, right? And I do think that in the junior sector, that the idea of just discovering ounces and hoping to be bought is plan A for a lot of guys, right? And I think that experience shows that doesn't really work, right? Plan A has to be we are tailoring our exploration efforts to building a mine,
Right.
right? And I think plan A always has to be to work towards building a mine. And if somebody comes along and buys you, well, that's nice. But I think sitting back and hoping to be bought is like buying a lottery ticket with a 1 in 100 or 1 in 200 chances of actually winning, right? So I think the guys who, even though they're still at the exploration stage, are thinking about conceptualizing a mine and thinking how you drill the deposit to improve that conceptualization rather than just add extra ounces, are the guys who probably are going to win in this cycle.
Yeah. Who do you think is next in terms of getting a lift up here? Because the good producers have done well. Agnico's done well.
Yeah.
There's a couple of good producers out there, smaller companies too, that have done well. But who's next? Is it the developers, or can we see the Exploricos do well?
Yeah, look, some of the developers have done pretty well already, right? So, like the Artemises and the Skinas and, the companies who are kind of really quite a long way down the track towards production and into production have done very well. I think the next stage is the guys who are a little bit further away, right? The guys who are probably 2 or 3 or 4 years away from production, and then behind that will be kind of the guys who are, still in the kind of the discovery resource expansion phase. I think that's typically how it's gone in the past, and I don't think that'll change this time around. Right?
What's the profile, the asset profile of the companies that you're looking into yourself? Are we talking large deposits, low grade, or are we talking small capex but high grade? What are you really looking for?
Look, I think the whole point of a portfolio is not to have all your bets on one kind of style, right? And, low-grade bulk tonnage can do well in a bull market, as can kind of high-grade underground, right? And, you look at kind of companies like Collective, which, has done incredibly well, Snowline,
right?
Those are kind of bulk tonnage with some high-grade portions, and those can do really well in the bull market. As can, high-grade underground, right? They can all do well.
Yeah.
And I think it's not a question of the style of the deposit. It's really a question of the way that the management conceptualizes it, packages it, and brings it closer to production.
Yeah. I've been asking everyone here kind of the thing that you're going down the road of here, which is top down or bottom up. And given the fact that you manage a lot of money, what do you find makes more sense for you? Starting at the asset level and then going from the bottom up, or starting at the macro level and be like, oh, where's gold going? If gold's going higher, I'm going to go and look for developers now.
Yeah, no, I mean, our process is entirely bottom up, right? People give us money to manage because they're in the gold fund because they're bullish on gold, right? So it's not for me to say you're wrong. I'm gonna buy defensive assets.
I don't want your money.
I don't want your money. I think our job is to just buy the best gold mining companies, whether it's production, development, exploration, that we can, right? And it's very much a bottom-up process.
Yeah. Right, Matt, we're standing here in Zurich and everything seems to be going well besides the juniors. Gold, silver, copper, everyone's doing well. The juniors, not so much. How come?
Well, that's been a long-standing trend that we've seen I mean, really going back a number of years. It was particularly acute last year in 2024, and you're an investor in the space. You'll know that there was a brief 4-week interlude where it looked like there was a parting of the clouds. This was in late September through late October of 2024. Newmont then came out with its disastrous earnings missed, and that just threw cold water on the space through the end of the year. I would actually say there are some green shoots that have formed, though, in the past couple weeks. And it's possible that this is just MJG portfolio specific. But I can say that we've had 4 different names within our portfolio, and we only have 17 different positions at the moment, with 2 of those private. We have 4 different names that have seen their share price basically go vertical in the matter of the past 2 to 3 weeks. A couple of them that I've written and talked about publicly, Ridgeline Minerals is one example, having closed its placement in late February at 15 cents, traded as high as 27 cents without there being a significant fundamental development to justify that move. Bravo Mining is another example that's seen a huge move in share price just over the past 3 or 4 trading days. So I don't know if this is a start of a trend. It could just be MJG portfolio specific. But I'm feeling cautiously optimistic. And then the other factor is that we're not seeing the PDAC curse yet. Now, it's possible that it continues, but in many years, you'll see selling immediately after that conference ends. And I'd say especially with the global market turmoil that we're seeing, like I'd actually say the juniors are hanging in there pretty well given where we are in the year seasonally.
What do you think it's going to take for us to see kind of a broad bull market in juniors? What people on YouTube interviews call a rip your face off rally or something like that. First of all, do you think we're ever going to see that again where the whole sector moves, even the boats that have holes in them? And what do you think it's going to take for that to actually happen?
I do think we'll see it again. It's possible this time is different, but I usually want to take the under if somebody's saying that. And we've seen, I mean, probably the 2 most recent examples of extreme moves in the juniors would be 2020 after the COVID crash, and then farther back, 9 glorious months in 2016. So I'm not saying that's going to happen this year. I'm not saying it's going to happen this year, but there will be a broad-based junior move at some point here in the cycle. I think we're starting to see some of the ingredients that you'd want to see already. Metal prices, in the case of gold, pushing all-time highs. In the case of silver, looking like it may be on the cusp of a significant breakout here. That's still TBD. Copper above $5 a pound, at least in the future pricing, close to its all-time high. So you're seeing the metals move. I'd also note that on the precious metal front in particular, you're seeing really good leverage, at least so far in 2025, amongst the major producers. Like the gold price is up, roughly 15% on the year. Like a lot of bigger producers are up 20, 30, in some cases 40% on the year. That's an ingredient that we missed last year. So metal prices move, starting to see leverage amongst the bigger producers. If that continues, I do think we see trickle down to the juniors. The question is there some major news events? Again, last year it was Newmont. Is there some black swan event that throws, cold water on the space? That remains to be seen.
What do you think is going to be the profile of the companies that actually do well here next? I mean, are we talking about developers? Are we talking about actually the explorers? And then also, whether it's developers or explorers, what's the actual profile of the company? Are we talking about a lot of ounces at a lower grade? Are we talking about a small project at a higher grade? What are you really looking for?
That's a good question. I mean, I'd say looking at it from, a bird's eye view, one very important ingredient for any company, whether it's the exploration or development stage, is to have clearly defined catalysts in the calendar, for management to be effectively communicating those catalysts to the market, and then for the company to have sufficient working capital to achieve at least one, if not multiple catalysts going forward. I think one differentiating point is whether the companies have the cash for that next catalyst, because even if there's a really good story, a company that I'm tracking that looks interesting, I like the people, but I know that they're going to need a finance in the near term for that next drill program, for the next economic study, whatever that next catalyst may be, I'll just sit on my hands and wait for the financing and won't buy in the open market. And I think, in the peaks of, towards the top of bull markets, that doesn't occur, but especially in this type of market, I think a lot of investors are taking that mentality. So I think how much cash you have in the bank is a key determinant. I will say that some of these later stage explorers are starting to see a lot of love. Like 2 examples that come to mind would be Atex and Collective. So these aren't brand new discoveries, but these are, and Snowline also comes to mind. These are legitimate discoveries where the drill results are exceeding people's expectations even at this later stage. So that's kind of one niche of the market where I think we're seeing some pretty significant moves over the past 3 to 4 weeks.
You're kind of hammering in a point home that you and I have been talking about a lot over the last couple of months, and that's really the bottom up versus top down, where you start at the asset level because the asset matters more than the macro. Is that something you believe is also going to prevail over the next couple of months and over this cycle? Is it going to be top down that's going to make people the most money, or is it going to be bottom up?
I'm a bottom-up guy through and through, and that's going to be the way that I continue to invest in this space. I think there are some folks out there that have particularly unique insights into commodity price moves and actually do have an edge. I'm not one of those people. And as we've discussed, like there's a whole checklist of different factors that I evaluate when looking at a given investment. I do have my biases, towards one commodity versus the other. Generally, the more contrarian, the better. I do consider the commodity a focus, but that's really the last thing that I look at when considering a given investment. And as we discussed, people are at the very top of the list. So that's the way that I'm going to continue to invest. Perhaps we get in the later stage of a bull market. I don't think we're remotely close to being there, and we start to see top-down rule the day, and bottom-up or company-specific fundamentals start to be overlooked. At that point, it might be a good sign for folks like me to hit the exit and wait for the next bear market to deploy capital.
All right, Tom, gold's at 3,000. Metals are doing well overall. The juniors, not so much. Why are the juniors not moving?
Good question. There's no one answer, but I guess investors have had their brains broken by a horrible, 4 years now. So, yeah, I think that will change, though.
What do you think it's going to take is it something we have to do as a sector to change the perspective, or does something have to change in the macro? What has to change for the juniors to actually start moving en masse?
For me, it's about delivering on the projects, right? So, I want to see lots of new ounces, things not being old things being re-drilled. I want to see new belts being discovered. I want to see, tier one potential. So that's why good names have had some success. I mean, recently we've seen Snowline hit a $1.6 billion market cap. So if you do make a good, genuine new discovery, you will get rewarded in the market. So I guess part of the answer is quality.
And that's something I'm going to come back to here in a second. But what do you think is going to perform here over the next, let's call it a year? Is it the producers, the developers? Is it just Exploricos outperforming? What do you think?
Part of our strategy is investing in producers, and we have had some pretty good success in that. I don't talk about it a lot, but I'm still comfortable investing in majors. You get money in and out quickly, and then developers we don't have a big focus on. I can see them being turnaround stories, especially if they have a fairly near term to production. Not a big focus for me. And then as a result of the high gold price, I am comfortable investing in super dynamic potential stories with potential big leverage in explorers, particularly gold explorers, particularly in exciting new belts like West Africa and Suriname and Guyana.
I think we kind of all know you as the red-headed Aussie who does exploration and models these things online. So I didn't actually think too much about you investing in producers. What are you looking for in a producer when you buy them?
It's super simple stuff. Margin, how many ounces they're producing, if they're they've been putting out good quarters, if there's good value. I mean, we saw Newmont crash recently, trying to work through some of the teething issues from Newcrest. So we saw some value there.
What is value though here? I mean, how do you even measure it? Is DCF the right way to do valuation in mining? I mean, some might disagree. I might disagree.
Yeah. I don't see a lot of value in spend, particularly my time or analysts' time in creating detailed discounted cash flow models. The companies do a reasonable job themselves, and then I kind of rely on the analysts at the big banks to tell me if the stocks are good or not. And I find following what I call the commodity beta, whatever the underlying commodity is for the particular stock, and this we've been talking about gold, just following signals based on the gold price is more effective getting in and out of these majors. And that's you might call it a quantitative strategy that we follow. So we just let the gold price dictate.
Yeah. This whole conversation and really what's happening here is making me think, is it really a right approach to start at the level of, oh, the economy or the dollar's not doing well, therefore gold's going to go up, therefore I should buy producers or developers or whatever? Or should we go the other way around and do bottom up instead of top down?
Certainly for the majors, just follow the commodity price, the commodity beta. But then to your point about understanding the projects and having high conviction, quite often those projects have really small market caps and low liquidity, so they are really conviction plays, and you have to get comfortable with the projects and be comfortable that they're going to come out as a win. So I do see more value in following prices, but then if I have a high conviction geo alpha play, really understanding the project, that's why I model them. And yeah,
Geo alpha, where's the meme with the dinosaur? Is it a dinosaur?
That picture that I put on Twitter came from Grok. I just asked it to create a picture of Geo Alpha, and it came up with something that I really like. I thought it came out nice. So,
What is it that you're looking for when we go lower down into the explorers? And I only have one rule for answering that question, and you cannot tell management because everyone's always got great management. So what is it that you're looking for?
you're setting me up, So you and I have had back and forth on Twitter about this. So it's the asset first, and as we saw at Wale, you can change management if you need to, but the asset has to come first, and that's quality rocks. That is Geo Alpha. So I get why if you haven't studied geology or engineering, why you would just follow management teams. You're relying on management that they've done the geological work and picked a good project. But for me, it's certainly the asset first.
All right, Eric, we're standing here in beautiful Zurich with a beautiful gold price. The juniors, though, they're not so beautiful. What's going on? Why are they not moving?
Well, I still think they're beautiful, but you're right to say that their share prices have not moved. And I think there's still this disdain of the juniors, unfortunately. Now we can see that there's a little bit of love for the majors for sure. But yes, those juniors are struggling. I think it's just the fact that there's been a lot of overpromise and under-deliver. The juniors have done a bad job of, first of all, I think, and this is what I can answer, is that there's too many of them. And we have too much fish now in the aquarium, and we're asphyxiating. And there's very low quality. And it's not easy for investors to decipher what is good and what is not good. And unfortunately, we've had a lot of bad. And some of these bad companies have burnt investors, maybe retail, maybe even smart investors, portfolio managers that have been burnt. A lot of overpromise and underdeliver. Sometimes it was not their fault. When the commodity prices totally fall, everybody falls, and the juniors will fall very bad. But yeah, they haven't lifted off. I'm hopeful that eventually they will.
What has to change for that to happen? Like, what do you think
I think
pushes
it's
them?
time.
How much more time?
Well, it's hard to say because it's been long, but I would expect that if the commodity prices remain healthy, I think it will eventually trickle down. But it will trickle down slowly. I think the developers are probably the next.
Okay.
And then the good explorer companies, hopefully. And I think between word of mouth, people will start to understand. But then again, I mean, as you know, it takes an exciting discovery, and it could, renew interest for the speculative. But the speculative is very hard because I think a lot of people have been burned. And then, as you know, with the cryptocurrency, money's been made more there. I think the young, youthful generation have not really been exposed correctly to the mining industry. Unfortunately, we've always been sort of the dirty duckling in the whole world. Mind you, sometimes, yes, mining had historically some sins, but I think we've improved a lot. But unfortunately, and this I don't want to get into too much politics, but there's a lot of jurisdictions where the media has portrayed mining as not totally correct.
Yeah.
And God knows, being a Quebecer coming from Quebec, I've seen projects where effectively they've been stalled because of the social stability aspect. And it's most unfortunate, but it's probably things that are lingering by the past of mining's history, but totally, unfair to sort of judge these companies by what has happened in the past. To the contrary, sometimes these are operations that are actually cleaning up the environment. And I think once that starts to get trickled down into the general population, I think there will be perhaps this renewed interest for the juniors. I hope.
Yeah. I'm not going to go into the politics here because I don't have 2 hours, although I would like to.
Yes.
And there's plenty to say there. What I do want to talk about is what you just mentioned, is that the developers are going to be the next ones getting the attention, because the producers, some of them are doing well. The good ones are doing well. Agnico surpassed everyone in market cap. Agnico's done an amazing job. What is the what is the profile of the developer that you think is going to do well? Are we looking for large deposits, low grade, small deposits, high grade, low capex, many things?
I hope it goes, and this is my personal, or as an analyst, sort of my prerogative, is I do enjoy small, high grade. I think there's beauty in smallness, just by the fact that different elements that is maybe more tangible, more acceptable. There's less disruption in terms of environment. So I'd like to see some underground, high grade stuff be put ahead. And if I recall, in my years back in the late 80s and early 90s, Cambiar, which was a mining company based out of Montreal, their strength was they had crack teams of mine builders, and they would take small projects or small operations, I should say small deposits, and bring them into development and into production, and production that lasted maybe 3 to 4 years. And it's always the idea is it's the profit margin you make, and it was a highly profitable company because they made a lot of money, and they were able to take that crack team 3 years later and repeat. And then what happened is that South America opened, and then as the majors started to be interested by Argentina and Chile, just bigger, and it was the motto that bigger was better. And Cambiar, which was a mid-sized company back then, sort of got pushed by the stampede, and they looked at things in Argentina and Chile, and they made these El Pachon, La Granja, all deposits that it was Cambiar that initially initiated. But I wish they would have stayed with their expertise, which was small underground operations. Now we know that sometimes these do create some problems, and there are some hiccups, and so don't have necessarily a lustrous career. But I still think that perhaps things will change, and these type of deposits will become popular.
Right.
And by de facto, the importance is that the majors with their state of production is that they're going to need more feed. And so, as to get back to this idea about trickling down, well, I think yes, effectively, good developers will be the prey of the bigger majors. And what would be nice to see is good competition, and to have effectively some developers being taken out as a huge premium.
There's a lot of talk. We opened this conversation by talking about $3,000 gold. And there's a lot of talk about where gold is going. There's a lot of talk about the macro and all that, even here. And then I wonder, does that matter? Should that matter to speculators? Should you really approach it top down, or should you, as a speculator, pay more attention bottom up? Start at the asset level, look at the people, and so.
Sure, and then where the price of gold is going. My opinion is you don't want gold to go up too fast either. And we've seen it in the past. And what goes up too fast can come down quite quickly. And so if we do see a pullback, I think this will be healthy. And, I don't see gold going back down to 2,500. But if we go back to 2,800, I just think that it's time to back up the truck and get into an interesting place. So I think this will be occasion. Certainly the people who think that they don't want to buy high, the idea that you can back at a bit of a lower price. But I still think the long-term perspective is very interesting for gold. And so, I think the idea here is to keep that margin healthy. And so you want to have lower costs. And if you have a spike in the gold price that's too exaggerated, what happens is that the service providers, the GOs, everybody will ask them for more money. And so I think what has helped now is that we've had a steady increase of the price of gold, but the inflation hasn't increased in terms of the cost. I think people have been sort of hesitant to maybe the service providers. They've been quite correct and not too greedy. And so I think that's helped the majors to maintain that very nice healthy margin right now. And so if the gold stayed rate stable right now, I think it'd be win-win for at least a year, as opposed to having gold maybe go up to 3,200 or 3,500 or God knows maybe even higher. So either a healthy pullback, a small pullback, or something that is stable. I think we're going to be winners in the long term.
All right, Claude, gold's at $3,000. The juniors, most of them are still losing money. For investors, what's happening? Why are the juniors not moving?
Let's rejoice. I mean, gold is at $3,000. I'm wearing my golden tie. So what are everybody complaining about? Last year at this same great conference, gold was around a little over 2,000. We've made $1,000 increase in gold. Now, that's fantastic. Why? Because it means that the senior companies are making huge amounts of money. They're printing cash.
Not for investors,
Well,
or at least not the juniors.
Yes. Unfortunately, I'm invested much more on the junior space. If I had just bought the seniors, it would have been less troublesome and I would have done better last year. But we'll see about this year. Things could change. Also, the other important thing to know is that all of a sudden, the NASDAQ is starting to turn. And from a technical point of view, there's been a huge event last week, is that for the first time, the gold stocks have been breaking out on a chart pattern against the S&P 500. So now the gold stocks are doing better than the general market. This should wake up people.
Yeah.
And one fact that is probably not too well known yet from the general public is that if you take all the sectors of the S&P and you ask people, where do you have the best margin? Is it technology? Is it healthcare? Is it consumer goods? No. It's senior gold stocks. The margins are phenomenal.
Yeah.
So this will start creating more M&A with the intermediates, and as always, it'll trickle down. I would have liked the trickling down to come earlier, but that's how it is.
Who do you think is going to perform better over the next, let's call it a year here? Is it the producers, developers, or just straight explorers?
Look, that's always very difficult to predict. So what is objective and that we know is that the valuation difference is so huge that timing doesn't really matter. If you have good junior stocks you can have really quality junior stocks selling for nothing. So whether you have to wait 6 months, 1 year, or 2 years is pretty much irrelevant. I mean, these things go up 10 times, 20 times. So more than that, I can't tell you. I don't know.
Is that even the right approach, though, to begin with, where we look at the gold price and then think, okay, what's going to happen and how is that going to trickle down? The top-down approach. Is that the right approach, or is mining really just a bottom-up sector where you pay attention to the asset level? Because some of the juniors have been doing well, at least
Yes.
the good ones.
Absolutely. If you can identify a junior which has a huge, big project and it's still trading for nothing, that's ideal, because whatever happens, people realize that there's a new mine in the making. So then you're right. Then I think stock picking still is the royal road to riches.
How do you find them? How do you find a good company? What are you specifically looking for in a good company? And don't tell me good management, because that's what everyone always says.
Yeah, and also let's not overreact on the quality aspect. In a big bull market, what goes up the most is not necessarily the best quality. So don't be afraid to buy things. We are in a bull market, so don't be overly anxious. Even if you don't have the best quality companies, even if your stock picking is not the best, and mine is certainly not the best, but I can tell you, we're in a bull market, we're all going to be making money. So even if you have projects which have some hairs, even if you are in some dicey jurisdiction, as long as you're diversified, you're going to be fine and you're going to make a killing. Especially, with silver stocks. Silver is still lagging gold. It's had a nice run up till now. when it'll accelerate, then there's a multiplying effect which will happen there also.
All right, Peter, we're standing here in beautiful Zurich with a beautiful gold price, a beautiful silver price, and even copper is doing well. The juniors, though, they're not doing so well. What's going on? Why are the juniors not moving?
Well, I think it's your typical cycle. You get the smart money comes into the sector first. They look for undervalued and lower risk, and you get that, of course, with the larger producers, and that's where the money flows. And we have seen them start to move. In fact, I was saying about a year ago, we're going to start to see M&A in the sector. My focus is silver, and we saw that last fall with First Majestic buying Gatos. We saw Kerr buying Silvercrest, and that shrank the space very quickly. But we also saw, with the silver price hitting $35 back in October, we saw money coming into that first layer, if you want to call it. And I think we're going to start to see, in fact, I heard that from a couple of companies just earlier today, that the investors that come to them are saying that they want to look at pre-producers. So that's been my expectation too, and it's textbook almost kind of pattern behavior. You see the money flow into the large caps first, the large producers, and then it's going to be to the mid-tier producers, and then the developers, then the juniors eventually. And I think that for the most part explains it. However, some juniors have moved quite a bit, and that's sometimes or many times it's because of drill results. There's some kind of buzz around the company for whatever reason. So there are some exceptions, but it's true. They have not quite, they have not quite seen the move yet that the larger producers and some of the mid-tiers have.
I would want to ask you when, but I don't see you holding a crystal ball. But it's fair too. Like we've been hearing about, it's going to come, it's going to come, it's going to come for a while now. And so what I'm going to ask you is, what needs to change? Like what is a situation in which the juniors actually start doing well?
So I think two things. One is that and one of the other things I heard today was that we're likely to start seeing some juniors consolidate. And when I say juniors, I mean actually sort of really smaller producers. Not necessarily junior explorers, but you'd almost put them in that category because their market caps are, say, sub 100 million, 50 to 80 million, that kind of thing. And they're producers, or they could quickly become producers. They have properties that are permitted and on care and maintenance. And some of them are in talks already to try to merge with perhaps 2 to 3 companies who suddenly you have potentially immediate cash flow or bigger cash flow, and they can go out and more easily as a bigger entity and raise money quickly, larger money. If they have to, they can do share consolidations and things like that, which many juniors need to do these days, and that will start to attract capital. So I think that's the kind of thing that we can look for. That will start to happen as well. And the metals price. I mean, I think I've been saying for the last few months that in the first half of this year, we'll likely see $35 in silver. We were at 34 a day or two ago. That's not far off anymore. We're still literally in the first quarter. And I think we could see $40 in the second half of this year. That kind of excitement will get things moving and getting money flowing into, I think, the juniors a lot more quickly.
What's the profile of the company that you think goes through M&A or gets those funds flow first? Are we talking about small but high-grade producers? Is it large deposits that are lower grade? Is it safer jurisdictions? What's kind of the profile that you're looking for?
Yeah, I mean, I think it's going to be the higher grades. It's going to be, sort of closer to production. Jurisdiction will make a lot of sense, especially if it's someone who's waiting on permits. It needs to be said that Mexico's been a concern for a lot of people for a long time. That looks like it may have turned 180 degrees because the permitting environment has become a lot more friendly very quickly with the new administration in Mexico. And that's what I'm seeing is that, you've got mining CEOs who are now quite confident that it's a matter of perhaps a month or a few months, depending on when they've applied for permits, that they're going to actually start getting their permits. So we've seen some of these companies that are waiting for permits, but just because they're either in that sweet spot in terms of being pre-producers, and with the silver price starting to move, that their share price has started to really, gap up on some days. So the moves are coming in certain categories in this space.
Well, I know you spend a lot of time thinking about the macro in silver. Listening to you and looking at what's happening over the last couple of months, it does make me think, does that even matter? Should it even matter? Should I, as a speculator, be focusing on where's silver and who do I buy next? Or should I go the other way around, bottom up, and be like, what's a good project? What's a good asset that would do well even in a bad silver price? What's kind of the right approach here?
I mean, honestly, both. I can't help. Part of how I do what I do is to constantly look at the macro. I think it's important to know what kind of environment we're in and why it will drive silver, because it's the commodity price typically, technically, and practically that drives the mining space. So it's very favorable as far as I'm concerned on the macro side. You look at the way things are geopolitically, economically, and so on. I'm hearing a lot more talk of recession. I'm hearing a lot more talk of stagflation risk. Europe is now, Germany is looking to spend something like $1 trillion on defense, and made a deal with the Green Party, willing to make all kinds of exceptions to things that they, for decades, if not almost a century, have completely avoided doing. That's going to mean a lot more inflation. So that kind of spending, because many countries just don't have the money, Europe especially, to start spending a lot more on defense. So defense is great for inflation, and it's great for metals. And so on the inflation side, it's great for metals that are traditional hedges in money, which are gold and silver. And so that's very bullish for the space. And so besides that, if you're looking for what kind of project, grade remains king, jurisdiction's important, and those are the kinds of things, those are the filters that I would use first along. I mean, it's cliche almost, but that along with management makes, those are the kind of three keys that you want to look at, the most important factors.
Thank you so much for your time.
It was a pleasure, Antonio. Thank you.
And thank you to everyone for listening and watching. And any and all questions for future interviews are, of course, welcome. Please post them in the comments. But I am still going to kind of repeat the warning that I said at the beginning, that everything combined with the warning that I gave you at the beginning is to say that you should treat this program as biased entertainment instead of unbiased journalism, because there will always be some type of bias in what everyone tells you online. They may own shares of the company, they may be a director, they may have been paid by the company, and so on and so forth. Now, this entertainment program specifically is intended only for experienced junior mining speculators, because mineral exploration, development, and mining is a very tough business. Losing money is the norm and should be the expectation, as this is a very complex sector, and the performance of individual companies typically depends on many different things, including geopolitics, macroeconomics, commodity prices, and many other moving particles that are typically outside of anybody's control, and no one can really foresee them, because unfortunately, and believe me, I have tried, and I might even keep trying, though I doubt I'll ever be successful. I just don't possess any superior knowledge about the potential direction of any stock or commodity price. And at least to my understanding, nobody out there does. So you should not rely on this program for directional advice or advice of any sorts, as this was a conversation that was general and impersonal in nature between a couple of individuals, none of whom are your licensed financial advisor, and none of whom can see the future. So no guarantees can be made about future events, and past performance is not a guarantee of future results. So please talk to a professional licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions by visiting setterplus.com, where you'll find the official filings of the companies that might have been discussed in here today. And if you don't do that, you're highly likely to lose your money. There's a couple of documents that are absolutely obligatory reading for people interested in the space. And that is, of course, the MD&A, which is the Management Discussion and Analysis. And it's an official document that the company publishes on setterplus.ca. You want to look at the financial statements of any company and understand how and why and where they spend money. And you also want to look at the management information circular, which is going to tell you how much money each insider of a company earns in total compensation, bonuses, and everything, and all the other incentives that they might have. It's also going to show you if there are any change of control fees and whatnot. It's a very important document. And then, of course, this is a technically focused business. So you also want to read the NI 43-101 technical disclosure. And again, if you don't understand it, consult with someone who does understand these things. Because if you don't do that, you are highly likely to lose your money. So, yes, thank you so much for listening to this. And I'll leave you with one of my favorite Charlie Munger quotes, which was, if you don't understand it, don't do it.